Stephanie, those comments between Powell and then Treasury Secretary Yellen, I mean, they are putting a huge focus now on this idea that inflation, yes, is a problem, but is still going to be transitory. He used the words, Powell did. Janet Yellen is saying that, yes, it could just be a little bit more medium term. Still, though, should markets be fearful of this inflation story?
Good morning. I don't think it's fearful. It's just recognizing that what's your definition of transitory? How long is transitory? If it's medium term and long term, you can see this lasting for quite some time. We know there's supply chain issues. It's going to take a long time to fix those supply chain issues. But there is inflation, Dom, no question about it. I mean, you have a CPI annualized at 5%. You have, and by the way, 10% in the last 3 months alone on an annualized basis. PPI at 7% annualized. And I look at the prices paid in the ISM report, and you're back to 1979 levels, and you have wage increases, which is more sticky, and you have shelter now actually on the rise because moratoriums have been lifted. So part of this is going to be transitory, whatever that even means in terms of the timeline, but some of it's not going to be transitory. I think the wages and the shelter are really things to keep an eye on. Look, we've got 9.2 million job openings out there, and the economist from the JOLTS company is saying that the companies can't find jobs, people to fill these jobs, so they have to actually increase wages. So these are, plus you and I have anecdotal information about the pressures that we're seeing in terms of pricing. So the key going forward is, do companies have pricing power? And that's what's going to be actually top of mind, at least for me, in earnings season. What do margins look like, and how are these companies passing along these price increases?
So Stephanie, I mean, as you kind of look at what's happening from this inflation landscape, are there certain types of companies, certain companies that will weather that storm more? Are they the ones who have pricing power? What kind of companies are you looking at with regard to who will benefit in the longer term because of this story?
Well, it's interesting because we just heard from Pepsi this week, right? And they have pricing power. And last quarter, not all of them, but many of the consumer staples companies did say that they were going to increase prices and pass that through. So I think the staples can handle this. I think discretionary, you're going to see better price increases as well, especially as consumer demand remains very strong. Restaurants, certainly. And I will also say, I think some of these industrial companies are going to see some pricing power. Caterpillar said that they actually are starting to raise prices. They indicated last quarter that in June of this year that they were going to start to raise prices. So we'll have to listen to some of these industrial companies and how they are faring. But I think that they will be able to increase prices as well. Look, I mean, I think at the end of the day, you have to step back. You got to just step back and say, why is inflation on the rise? It's because growth is on the rise, right? That's a good thing that growth is on the rise. We have a very strong consumer. We have very, very strong manufacturing. Inventories are at 5-year lows. So I mean, this is a good thing, right? The growth part of the story is good. The inflation, we got to watch it. But I think with low interest rates, this combination of all three is very positive for equities over the longer term.
Stephanie, before we let you go here, you mentioned growth, you mentioned inflation, the good and the bad kind. Why is it that Treasury investors will still accept 1.33% yield for 10 years if that growth story is intact?
I know, that's the conundrum, right? We're all kind of scratching our heads. Is it technical? Was there record shorts? Everyone caught on the wrong side. Is it the Fed? Is it the BOJ? Is it the ECB letting inflation run hotter than expected? Is it the Delta variant? There's a lot of different things. But look, I think at the end of the day, you got to, again, step back and say low interest rates are pretty good for the consumer and for corporations, and also risk assets. So, but it is something to watch because obviously the bond market is a very good tell usually, but it is getting a bit distorted because of all of the monetary policies around the world.
Shepard Smith here. Thanks for watching CNBC on YouTube.